Welcome to your guide to mortgage loans. Buying a home is the biggest financial decision most people will ever make. It is an exciting milestone, a huge step toward building wealth, but navigating mortgages can feel overwhelming. I'm going to break it all down for you, step by step. The difference is knowledge. Knowing your options is powerful. It can save you thousands over the life of your loan. This guide will be your secret weapon. That's exactly what we are going to do together right now. We will explore every major loan type available. Your dream home is closer than you think. In this guide, we are going to cover everything you need to know. We will leave no stone unturned. First, we'll dive into the most common type of loan, the conventional mortgage. These are the workhorses of the industry, perfect for borrowers with good credit and a stable financial picture. We'll discuss how you can qualify, the benefits of avoiding certain fees, and why they offer so much flexibility. This is the starting point for many homeowners, and you'll understand why it's so popular. It's the gold standard for a reason. Next, we'll explore the incredible world of government-backed loans. These are game changers. They are specifically designed to make homeownership more accessible to everyone. We will break down FHA loans, which are fantastic for first-time buyers or those with less than perfect credit. We will also cover the amazing VA loans, a well-deserved benefit for our military service members and veterans. And we won't forget USDA loans, a hidden gem for anyone dreaming of life outside the big city. These programs can open doors you thought were locked. After that, we'll look at the other side of the spectrum with jumbo loans. These are for the big-ticket properties in high-cost areas. If you're dreaming big, you need to understand how these loans work. Then we'll tackle one of the most important decisions you'll make: choosing between a fixed rate and an adjustable rate mortgage. This choice directly impacts your monthly payment and your long-term financial security. We'll weigh the pros and cons of stability versus flexibility, so you can decide what's right for your life plans. Finally, we'll put it all together. We will look at special assistance programs that can give you a helping hand with down payments and closing costs. And most importantly, I'll give you a simple step-by-step guide to help you choose the perfect loan for your unique situation. This isn't just about learning facts, it's about building a strategy. You will walk away from this with a clear plan and the confidence to take the next step. Your journey to homeownership starts now, and you are in the driver's seat. Let's get moving. Let's start with the most popular option, the conventional loan. Think of this as the classic all-American choice for buying a home. Conventional loans are backed by private lenders and follow guidelines set by Fannie Mae and Freddie Mac. Because they aren't government-backed, they offer incredible flexibility. You can choose a fixed interest rate where your payment stays the same for 15, 20, or 30 years. Or you could opt for an adjustable rate mortgage, which often starts with a lower interest rate. Conventional loans can be used to purchase a primary residence, a second home, or even an investment property. If you have a solid financial foundation, the conventional loan is often your best and most cost-effective path to homeownership. It's important to understand that conventional does not mean one size fits all. You have conforming loans and non-conforming loans, like jumbo loans. It offers strength, flexibility, and excellent value for the qualified homebuyer. Now let's get down to business. How do you get a loan? Lenders look at a few key things to decide if you qualify. The most important factor is your credit score. This 3-digit number is like your financial report card. Generally, you'll need a credit score of at least 620 to be considered. However, the higher your score, the better your interest rate will be. A score of 740 or above will usually unlock the most competitive rates. Next up is your down payment. While a 20% down payment is ideal because it helps you avoid other costs, it's not a requirement. Many lenders now offer conventional loans with down payments as low as 3% or 5%, especially for first-time homebuyers. Lenders will also closely examine your debt-to-income ratio, or DTI. For a conventional loan, lenders typically prefer a DTI of 43% or lower. Finally, you'll need to document your income and assets. Lenders want to see a stable employment history, usually for the past 2 years. They'll also want to see that you have enough cash for the down payment and closing costs, plus some reserves left over. Let's explore a significant advantage of conventional loans: escaping private mortgage insurance, or PMI. This can be a huge money saver. PMI is required if you make a down payment of less than 20%. It's an extra fee added to your monthly mortgage payment, an insurance policy for the lender. Unlike some loans, PMI on a conventional loan is temporary. Once you've paid down your mortgage to 80% of the original value, you can request PMI removal. Another way out is if your home value increases due to market appreciation. A new appraisal showing your loan balance is less than 80% of the new value allows you to cancel PMI. You are actively managing your investment to save money sooner. Every extra principal payment gets you closer to eliminating that PMI payment. This ability to shed PMI is why a conventional loan is often cost-effective for prepared buyers. Let's explore government-backed loans. They make homeownership a reality for more Americans. The government acts as a co-signer, providing a guarantee to lenders. This reduces risk, enabling loans for those who may not qualify for conventional mortgages. Government backing opens doors to lower or no down payments and a path forward even with less than perfect credit. We'll explore FHA, Virginia, and USDA loans. These are powerful tools that have helped millions achieve their dreams. Let's see which key might be right for you. Let's start with the most popular government-backed option, the FHA loan. FHA stands for the Federal Housing Administration, making homeownership accessible since the 1930s. It's designed for those with steady jobs who may not have a large down payment. A key feature is the low down payment requirement. You can get a home with as little as 3.5% down, lowering the barrier for first-time buyers. FHA loans are also known for more forgiving credit score requirements. Often you can get an FHA loan with a score as low as 580 with a 3.5% down payment. FHA guidelines also allow for a higher debt-to-income ratio, giving you more budget flexibility. There is a trade-off for this flexibility: mortgage insurance premium, or MIP. You'll pay an upfront premium and a monthly premium for the life of the loan if you put down less than 10%. For many, paying that fee is worth it to start building equity sooner. The VA loan is the best mortgage product in America. It's a thank you to active duty service members, veterans, and eligible surviving spouses. If you qualify, this is an opportunity you cannot afford to overlook. The benefits are incredible, giving our military heroes a real advantage in the housing market. The most powerful feature is zero down payment required. For most, saving for a down payment can take years. The VA loan eliminates that hurdle completely, allowing service members and their families to buy a home and start building equity right away. With a VA loan, you will never have to pay private mortgage insurance or PMI. The VA backs the loan, so lenders don't need that extra insurance. The interest rates on VA loans are also typically lower than on conventional loans. This is a benefit you can use more than once. Furthermore, Virginia loans are assumable. The VA loan is a powerful, flexible, and well-deserved tool for our nation's heroes. Let's talk about one of the best-kept secrets in the mortgage industry, the USDA loan. When people hear USDA, they think of farming. But this loan program, guaranteed by the U.S. Department of Agriculture, is about so much more. Its goal is to promote homeownership and economic development in rural and suburban areas. And you might be very surprised by what counts as rural or suburban. These programs cover about 97% of the nation's land mass, including many small towns and the outskirts of major metropolitan areas. You don't have to buy a farm to use this loan. Just like the VA loan, the USDA loan has a show-stopping feature: zero down payment required. That's right, another path to homeownership without needing to save for years for a down payment. This makes it an incredible option for families who want more space and a quieter lifestyle but don't have a lot of cash in savings. The USDA loan makes the dream of a home with a backyard, in a community with good schools, an achievable reality for so many people. It's designed to help families put down roots and build a better life outside of the dense urban core. To qualify, there are two main requirements. First, the property itself must be located in a USDA-eligible area. You can easily check any address on the USDA's official eligibility map online. You'll likely be shocked at how many areas near you qualify. Second, there are income limits. Because the program is designed to help low to moderate income households, your total household income cannot exceed a certain threshold, which varies by county and family size. These limits are quite generous, however, and many working families find they easily qualify for the program. Similar to other government loans, there is a mortgage insurance component, but it's typically more affordable than FHA mortgage insurance. You'll pay a small upfront guarantee fee that can be rolled into the loan amount, plus a small annual fee paid monthly. The interest rates on USDA loans are also extremely competitive, often below what you would find with conventional financing. For the right buyer in the right location, The USDA loan is an unbeatable combination: zero down, low interest rates, and affordable mortgage insurance. It's your ticket to finding that perfect home with a little more space to breathe. So far, we have covered loans that fit within the standard limits set by government-sponsored agencies. But what happens when your dream home comes with a bigger price tag? This is where the jumbo loan comes into play. A jumbo loan, also known as a non-conforming loan, is a mortgage that exceeds the conforming loan limit set by the Federal Housing Finance Agency. Think of jumbo loans as the financing tool for the luxury market. As a result, the rules for getting a jumbo loan are different and more stringent than for a conforming loan. You will also find a great deal of flexibility with jumbo loans. In many expensive real estate markets across the United States, a standard family home can easily push past the conforming loan limit. Understanding the world of jumbo financing is your next critical step. Lenders are extra careful about who they lend to for jumbo loans. Qualifying requires you to prove you are an exceptionally strong and low-risk borrower. Lenders will scrutinize every aspect of your financial life. First, you will need a higher down payment, typically at least 10 to 20%. Your credit score also needs to be in excellent shape, generally a FICO score of 700 or higher. Lenders will also look closely at your debt-to-income ratio, typically wanting to see a DTI no higher than 43%. Finally, be prepared to show significant cash reserves. Lenders want to see that you have enough liquid assets left over after your down payment and closing costs to cover your mortgage payments for several months. Meeting these strict requirements shows you have the financial discipline needed to handle a jumbo loan. Now that we've explored the major types of loans, we arrive at a critical decision point: fixed rate versus adjustable rate. Let's start with the most popular option, the fixed rate mortgage. With a fixed rate loan, your interest rate is locked in on day one and never changes. This creates predictability and peace of mind. Your principal and interest payment will be the exact same amount every month. The fixed rate mortgage is the perfect choice for the long-term homeowner, protecting you against rising interest rates. The most common term is 30 years, offering the lowest monthly payment. You could also choose a 15 or 20-year term. Payments will be higher, but you'll pay less interest and build equity faster. The fixed rate mortgage is your financial anchor. Let's break down adjustable rate mortgages, or ARMs. Unlike fixed rate loans, ARMs start with a lower interest rate for a set period, usually 5, 7, or 10 years. After that, the rate adjusts annually based on a financial index plus a lender's margin. The main draw? That lower initial rate, which means lower payments early on. ARMs are great if you plan to move or refinance before the rate adjusts. Think job relocations or starter homes. But there's risk if rates rise, so do your payments. To protect you, ARMs have caps limits on how much your rate can increase at each adjustment and over the life of the loan. These caps help prevent payment shock. ARMs work best for buyers with short-term plans or those who can handle higher payments if rates climb. If you want to maximize savings now and are confident you'll move or refinance soon, an ARM can be a smart tool. But if you crave long-term certainty, stick with a fixed-rate mortgage. It's all about your timeline and risk comfort. Weigh the pros and cons carefully. The right choice depends on your future plans. Beyond loan types, there are programs that make home buying more affordable. Many buyers miss these. Down payment assistance and special loan programs can bridge the gap between your savings and what you need. First-time buyer programs are the most common, and you may qualify if you haven't owned a home in 3 years. Assistance comes as grants you never repay or silent second mortgages loans with no payments until you sell or refinance. These can cover your down payment or closing costs, the biggest hurdles for most buyers. State, county, and city agencies run these programs to promote stable communities. The amount varies by location, but it can be thousands, even tens of thousands of dollars. There are usually income limits and sometimes a required homebuyer education course. For eligible buyers, this is a game changer. Imagine a grant covering your entire down payment, getting you into a home sooner. These opportunities help thousands every year. The key: ask your lender about local programs. Don't leave money on the table. A little research could turn your dream into reality. Take advantage of every resource available. Some programs target specific professions. Think teachers, firefighters, police, and healthcare workers. These hometown hero incentives help essential workers buy homes where they serve. Benefits include down payment help or better loan terms, sometimes tied to community goals like energy efficiency or revitalization. It's a win-win. You get a home, the community gains a committed resident. Some private lenders and employers offer professional programs too. like doctor loans with low or no down payment and no mortgage insurance. Similar deals exist for lawyers, dentists, and even bank employees. Always ask your employer or association about home buying benefits. The best mortgage solution might combine a primary loan with special assistance. Talk to your loan officer about state, local, or professional programs you might qualify for. A knowledgeable lender can guide you through the process. Don't assume you have to do it alone. There's a whole support system out there. Be proactive. Explore every option. The right combination can make homeownership much more attainable. Let's simplify your decision with 4 key questions. First, how much do you have for a down payment and closing costs? This narrows your options fast. If you have 20% or more, a conventional loan is likely best. Less, FHA or special conventional programs may fit. Little saved, but military or rural. VA and USDA loans offer 0 down. Second, what's your credit score? High scores unlock the best rates and terms. Lower scores? FHA loans are designed for you. Third, how long will you stay in the home? Long-term, go fixed rate. Short-term, consider an ARM for lower initial payments. Your timeline shapes your strategy. Fourth, what's your risk tolerance? Fixed rates offer certainty. ARMs offer savings but with risk. Answer these honestly to find your best fit. This framework keeps you focused. Don't get overwhelmed. Let your answers guide you. The right loan is the one that matches your reality. Use these questions as your compass. Let's match your profile to the right loan. First-time buyer, lower credit, small down payment? Start with FHA and add local assistance. Excellent credit and a solid down payment? Conventional loans offer great rates and flexibility. Served in the military? VA loans are unbeatable. 0 down, no PMI. Looking for rural living? Check USDA eligibility for 0 down options. Remember, the lowest rate isn't always the best deal. Compare total monthly payments, including insurance and fees. Sometimes a slightly higher rate with no mortgage insurance saves you more. Look at the whole picture, not just the interest rate. Ask questions, understand the answers, and choose confidently. Your situation is unique. Tailor your loan to fit. Combine programs if possible for maximum benefit. You're now equipped to make a smart choice. The right mortgage is out there for you. This is the end of our guide, but the start of your homeownership journey. You now know the differences between loan types, the power of assistance programs, and how to match your needs to the right product. The perfect loan for you exists. It's not a myth. Whether you're just starting out or searching for your dream home, there's a solution tailored to you. Your next step? Get pre-qualified. Meet with a mortgage professional to review your income, credit, and savings. Don't be shy. Loan officers are there to help, not judge. Pre-qualification turns dreams into actionable plans. Shop around. Compare at least 3 lenders. Look beyond the interest rate. Check monthly payments, closing costs, and all fees. This is the biggest financial decision of your life. Treat it like you're the CEO. A little extra diligence now can save you thousands later. Use your new knowledge to ask smart questions and demand clear answers. Don't settle for the first offer. You owe it to yourself to find the best deal. Homeownership is within reach. Your journey starts now. Go make it happen. I want to leave you with one final thought. The path to homeownership can sometimes feel long and complicated. There will be paperwork and questions. Every homeowner before you has walked this same path. They have navigated the same challenges, and they have reached the finish line. You can too. The feeling of getting those keys in your hand, of walking through the door of a place that is truly yours, is worth every bit of effort. It is a feeling of security, pride, and accomplishment like no other. The journey starts with a single step. You have already taken a huge step today just by educating yourself. Your future home is waiting for you. It is about building a foundation for your future. Now it's your turn to claim your piece of the American dream. Go out there and make it happen. Here's to your future home and the wonderful memories you will create there.